Welcome to another crypto market update with Glenny Doge. We have more choppy price action and the market doesn't know what it wants to do. So we're just going to keep hanging in there and waiting on January 20th when things should start to actually pop off. I think it'll be very turbulent until the inauguration and new officials actually are taking these positions of regulation for cryptocurrency and a lot of things that affect the future of cryptocurrency and the way that it's going to be enabled to do more for our economy. So looking at the Bitcoin hourly chart, we have a little bit of green here within the past few hours. We are trying to recover this dip here. The MACD has started to curl up. Looks like we might break through this orange line here, and that would be bullish. But it's been very choppy. So even if we do, there's no promises. We could come right back down just like we did here and see further consolidation. Bitcoin has been hanging out right here within this range for the past few days. It's not all doom and gloom because we did bounce pretty good off of the bottom here, and we've been holding this zone and consolidating, which means it should be gearing up for a move to the upside. The 4-hour RSI is sitting right at 48, which is just under 50. 50 would be right smack dab in the middle of the neutral zone. So when we finally get above 50, you will see life in the market and for Bitcoin. Scrolling over to my favorite cryptocurrency, Dogecoin, it's looking very similar, and it's like it's just waiting on Bitcoin to make a move. Ethereum, it's trading flat, but we are holding this zone, so that's the good news. Shiba Inu started to rip up yesterday here and then fell right back down. XRP is looking pretty good. It has some bullish momentum up here at 62 on the RSI, looking like it's ready to make a big move, holding right at $2.50. Cardano is not looking bad. Ethereum Classic looks exactly like Ethereum on the chart, and that's no surprise because they are it is an Ethereum coin, of course, so it's going to follow very closely what Ethereum does. Dog with hat is not looking great. It's way down at 38 on the RSI, so momentum is not there. It's just not there. Bitcoin dominance is stubbornly hanging out here right around 58%, and we really need to see that drop before anything is going to happen. Now on Friday, the stock market tanked pretty severely. Everything down over 1.5% here. The S&P, NASDAQ, and Dow Jones. That is because of employment data, jobs data. Jobs grew way more than they were expected to in December. All of these new jobs were added, and that's not what the Fed wants to see for interest rate cuts, because if the economy is looking very strong, it could reignite inflation concerns, and that's what it's done. So it's hard to explain. In the long term, it's actually a good thing that more jobs were created and the economy is doing good and it's strong. For inflation, it makes for a sticky situation, and it means we're not in the clear yet as far as inflation goes. And the Fed's Jerome Powell has been trying very hard to achieve the soft landing and get inflation down to, I think it's 2% is their target. We still remain a little bit above it. The expectation is that they will hold interest rates at this next meeting. That took all the wind right out of the sails for the stock market. Now, I think it'll recover, but this is just, they're pricing in the fact that interest rates are going to remain held where they're at, and that's going to cost more to borrow. It's going to cost more to invest for these large investors, and that caused Bitcoin and the crypto market to crash as well. Bitcoin had an earlier reaction. On Thursday, Bitcoin had an immediate reaction to that and dropped hard down to this level. Strangely, we saw a bounce Thursday night, though, and Friday it basically climbed out of this hole a little bit while the stock market was absolutely tanking. So there is correlation between the Bitcoin crypto market and the traditional stock markets, but it is not always, they don't always run together per se. There's differences. There's correlation, but it is a different thing. So now that the market has priced in this woeful news that the economy is doing too good, now we can start to recover and go in our own direction, no matter what the stock market's going to do. Let's look at an article I found on Cointelegraph.com. I'll leave the link to it in the description, and it is basically going to explain how Bitcoin is a hedge against inflation. So fiat money will eventually decrease in value due to central bank money printing, which they do every year. I think they have like $100 billion planned to be printed just in 2025 in the US. Bitcoin has a fixed supply of 21 million coins. The restricted upper limit gives Bitcoin an upper hand against inflation. Now, during the COVID-19 pandemic, we saw a lot of money printing, and that is one of the things that caused this crazy high inflation that we have been seeing for the past few years ever since. And although I think inflation it has come down, they may have gotten it somewhat under control, I do not think it's going to go away. I think it's going to continue to be a problem for the rest of my life. So my theory is, how long do you want to allow the government to keep you down? Because they say, well, we can print money because even if it causes a little bit of inflation, what we can do, we can use this tool known as the interest rate adjustment, and we can raise interest rates, and that'll bring inflation down. So you're raising interest rates. Now it costs people more. First-time home buyers. They're a young couple, let's say, hypothetically. They're buying a new home for the first time. They don't have tons of money to begin with, so they're getting a mortgage. Now they're paying more to buy a house. So you tell me who is on the wrong end of the stick. Who is suffering here? It isn't the federal government. It's the people. We get to deal with the consequences of their poor actions and planning and the overstimulus they gave out in the COVID-19 pandemic. Now, Bitcoin and cryptocurrency is a hedge against inflation because it's decentralized. You have no one. Bitcoin gets mined, and as it is mined, technically there's inflation due to the mining of new Bitcoin. That's why there's halving cycles, and eventually it will cap out at the maximum amount of Bitcoin. You won't be able to mine more Bitcoin after a certain point. The people affected most by crazy high inflation that we have been seeing is the middle class. And as a member of the middle class, I'm here to tell you that I think the best way to hedge against inflation and to try and keep up in this capitalism is cryptocurrency. And because there is risk involved, and yes, it can go down. In the long term, though, it's only going to go up. What is for sure is that the money sitting in your bank account right now is depreciating. As inflation continues on, your buying power of the same amount of money goes down. So what is for sure is that your money that is sitting as fiat currency is going to depreciate. This is just one very big catalyst for Bitcoin and the crypto market to rally insanely to the upside and see huge gains. Fear and greed index is sitting at 48, right in neutral territory, at the lower end of neutral territory, actually. We have seen negative Bitcoin ETF inflows, which is not good, but doesn't surprise me with what's going on in the stock market and everything. So, alt season at 46. These are the times where opportunities present themselves when the sentiment is largely bearish. There's a thing called MVRV, market value, real value, and Market value means the price of the coin. Real value means potentially what that coin is really worth in the long run. And this is just another opportunity. Every time the sentiment turns bearish, it's just another opportunity to buy more and cash in on the subsequent bounce to the upside. So just wanted to point that out. I'll also leave this link to this article in the description as well. It's on TradingView if you want to go take a look at it. That's all I got for today. Don't forget to hit that like button and subscribe. Thanks for watching, and I'll see you next time. None of this is financial advice. I am not a financial advisor. This is just my opinion.